Hello, my dear students. Today, this session would be upon the working on the non-profit organization. So, here we go with one very simple example, and I would like to explain you on how to work upon the sums given on a non-profit organization. Normally, the question carries, say, the two parts of the previous year would be given to you, and also the receipts and payments account would be provided to us. So here we are expected to work on the income and expenditure account as well as the closing balance sheet. So normally it is the plight of the students that it would be a difficult chapter and we would leave it under choice. So I would suggest you to go for this chapter, especially because it is less time consuming, and more so ever that the solution, once you learn how to do it, it sounds easier. So straight away, let's go into our understanding part. So as I told you, the two parts of the question, and we begin here first with the receipts and payments account. As the part of the answer, we need to prepare income and expenditure account as well as the closing balance sheet. So here, all of you should understand that the receipts and payments account is in the nature of the real account. And when you're preparing income and expenditure account, it goes under the nature of, say, the nominal account. So here what happens is, because of these reasons over, that there will be a change in the sides. Now you could observe that the receipts are given on the debit side. Students, just observe the receipts and payments account. The debit side represents the receipts side, correct? And the payments would be put under credit side. Now when you are working on income and expenditure account, what happens is it goes as an opposite terminologies. That is, the debit items will move under credit and the credit items will be taken under debit. What does it mean over here? The debit, that is the receipts, will be taken into the credit side. So here we call it as income and expenditure. Instead of receipts and payments, we would term it as income. So income marks the receipts. And similarly here, the payments is put under expenditure terminology. This is the first part of understanding. Please remember, the debit goes onto the credit and the credit comes into the debit. The second most important point of our understanding would be, say, in respect to the capital items and the revenue items. So here, what are capital items? What are revenue items? Capital items are those items which normally, carry a big money, and also, say, those which are non-recurring in nature. Revenue items are recurring and they are repetitively happening, occurring, and also they will involve, say, the regular kind of activities. So how to distinguish this capital and revenue? I have a trick for you. When you find a certain items into, for example, this furniture, you could see, in the balance sheet, furniture, similarly buildings, sports materials, library books. So whatever the items are put under the asset side marks the capital items. So all the capital items are to be taken into the balance sheet. That is the understanding. So when you come into the receipts and payments account, observe there is purchase of books. And this purchase of books also has to be taken as capital item. You could see, you could relate this item to the balance sheet. So office expenses is a revenue payment or a revenue expenditure. Printing and postage is revenue. Salary is revenue. How am I categorizing? It is, I told you that all recurring expense. Recurring means what? Frequently happening or periodically happening items. All right. And when you see here bank loan repaid, observe here bank loan is put under the liabilities side of the balance sheet. So we find all capital items into the balance sheet. So this will also be categorized as a capital item. Subscriptions to newspapers again would form a part of revenue. So now you are easily able to distinguish what is capital and what is revenue. Subscriptions received is always a revenue income. Entrance fees. When it comes to entrance fees, you should always check out on the adjustment if there is any specific instruction. In the absence of any specific instruction, that we take this entrance fees as a revenue item if there is no specific instruction as such on the entrance fees, then it is revenue. Otherwise, upon the instructions given under adjustments. Donations. This also, when you observe, no, here it would be, say, look at this particular point, capitalize 50% of entrance fees and 100% of donations. So all the entire donations should be taken as a capital item. Half of the entrance fees would be taken as a revenue item and the other half would be taken as capital item. So entrance fees, how much it is given? 8,000. So 8,000, 4,000 will be taken into the income and expenditure account. The other 4,000 has to be put under the balance sheet. So for entrance fees, remember, in the absence of any instruction, treat it as revenue, give a note if possible. And if there is any specific instruction, follow the instruction that is being given under the adjustments part. Now for the adjustments, I will give you a very, very easy method to remember these adjustments. Just observe carefully. See, first learn the concept, and after the concept in your mind, I think my tricks and techniques will work upon, right? So here, normally the income and expenditure account, it would only take all those items that belongs to the current year. See, when you observe carefully, the balance sheet belongs to the previous year students. I'll just scroll up to see the balance sheet date being given. You see here, the balance sheet, what is the date given? 31/3/2017. And when you observe the receipts and payments account, it says 31/3/2018. So what you observe here, the previous year's balance sheet as well as the current year's receipts and payments account. Now here, which is the current year? Easy to identify, 31/3/2018, which means again it is 2017 and 18 will be the current year. All right. So now what is the logic here is when you're preparing income and expenditure account, all those items that belongs to the current year, that is your 2017 and 18, must be taken. So this is the logic. And now coming to our understanding, I said this is previous year's balance sheet. Whatever that is being given as an adjustment into the previous year's balance sheet should not form a part of your income and expenditure account. So here, just see this particular item, office expenses outstanding. Outstanding for which year it is? It is for 2016 and 17. Whereas we are working on 2017 and 18. So this 5,000 outstanding office expenses should not be taken into our current income and expenditure account. So it's a very easy understanding that what items belong to the current year should be taken and whichever belongs to the previous year does not form a part of our income and expenditure account. Now, when you take this into account, now I will just give you the trick what I was talking to you all about. See, when you take expenses into account, you have both outstanding expenses as well as the prepaid ones. That is, you have paid advance money, that is prepaid expenses. Now, children, in case if outstanding expenses for the current year is given, generally where is it given? The current year outstanding would be found under the adjustments. You see here, salary prepaid is given. Of course, in this example, we don't have any outstanding expenses for a current year. So in case if there is any current year expense, it would be mentioned over in the adjustments. So if it is outstanding expenses for the current year, you add because it belongs to this year. Similarly, if there is any prepaid expenses for the current year, you subtract it because it belongs to the future year and it is not for this year. That is why you may have to subtract it. Now you see here salary prepaid. Salary prepaid has to be subtracted. If it is given salary outstanding, it needs to be added. This is all about the current year adjustments, current year's adjustments. Okay. The same way, if the expenses outstanding is for the previous year, where do you find this previous year adjustment? Previous balance sheet. So outstanding of the previous year, you just change the sign. You should minus it because it belongs to the previous year. I told you nothing comes from the previous year or the future year. So minus. And on the other hand, if there was any prepaid expense from the previous year, it needs to be added. See, observe logically. We are talking about previous year 2000. Let's imagine this particular example where 2017 and 18 is our current year. Current year is 17 and 18. And what should be the previous year? The previous year would be 16 and 17. See, 16 and 17 prepaid. That means that for this current year 17 and 18, it has been paid in the year 16 and 17. So obviously, as I told you, 17 and 18 is the current year and you should take anything belonging to the current year. It should be taken over. So that is how this particular tabular technique works upon the adjustments. And the same technique you can observe, you can follow it even for, say, the incomes also. So when you talk about the incomes, the same technique works out. I just put it across like this here. So when you're talking about incomes, let's imagine it is incomes, right? So when you take these incomes, outstanding incomes, we don't call it as outstanding actually, yet to be received, accrued, that is earned but not received. Normally that is the terminology that we use, not as outstanding. So this is accrued, we say. Okay, but whatever it is outstanding, that is yet to be received, I should say that. So I will call it as outstanding, in bracket I would put it as accrued, okay, of the current year needs to be added. And if it is pre-received, I don't say prepaid again, it is received in advance. Let me use the word received in advance. So in case if it is received in advance, then what I should do? I should minus it because it's a liability and it should be subtracted. Okay. Now, when you move with the incomes of the previous year, the same thing goes with here. Suppose if it is yet to be received, the income that needs to be received, yet to be received of the previous year, we need to minus it. Okay. And if you have received in advance for the previous year, it belongs to the current year. So it should be added. So this is how you go with adjustments. Very, very simple. If you can follow one particular add and minus symbol over here, that it goes everywhere with the same kind of symbol. All right. So now moving on. Now depreciations, like how you have treated with the depreciations in the final accounts chapter or in the partnership chapter, the same way it should be considered as a loss. So naturally you take it to the debit side of the income and expenditure account. Okay. Then subscriptions. Subscriptions being an income. Let's be a little more careful upon it. Usually the word outstanding is associated with expense. Normally, that's the plight of the student that when they see outstanding, they relate it to the expense. Now, when it says outstanding subscriptions, you have to be a little cautious. This is like income outstanding. Income outstanding is an asset. So current year income, it needs to come to us, add it back, and it is shown under the asset side of the balance sheet. Now here also there would be hidden adjustments. You observe here 2017 and 18 is our current year, but 2018 and 19 would become our future year. That is the year next to come. And this 5,000, what you have received already is an advance. So when you call it as an advance, it does not come into the current year. And remember, it should be shown as a liability. Why a liability? Because you have already received the money and you're yet to work for them. Am I right? So therefore, from our side, a little benefit is yet to be given to the other party. So therefore, it needs to be shown as a liability. Now, when you are through with these adjustments, income and expenditure account, when you are doing, so what you do exactly is you start with always with the debit and credit sides. You look at this, debit side marks the expenditure and the credit side would be income. It's a crisscross, that is opposite side you have to take. And second point, I told you, take only revenue items. The third point, take only such items which belongs to the current year. And the fourth point is in respect to your adjustments. So outstanding and prepaid or advance money, especially in respect to expense and income, works out similar, but be cautious over whether you are discussing your current year or the previous year. And for entrance fees as well as for donations, observe the adjustments given. Have they given any specific adjustments? Like in this case, they said entrance fees, half of it should be capitalized, and for donations, the entire money has to be capitalized. Accordingly, you may have to take the items both into the debit side and credit side. So I hope it is my explanation is more clearer to you. Buy subscriptions, add outstanding for the current year. Only one adjustment is found over here. And similarly, office expenses, no adjustments. Printing and postage, you don't have any adjustments. But for salary, you have prepaid, which should be subtracted. Subscriptions to newspapers with no adjustment is taken on here. And depreciation on buildings. Now, interest. Interest is a receipt. It is being put on the credit side. And one last step is like how you balance the accounts, usually the T accounts. The debit and the credit needs to be balanced. The difference money will be put on the shorter side. The credit side is more, it should be called as a surplus. You can also call it as excess of income over expenditure. And in case if the debit side is higher, the total is higher, then the same difference would come on the credit side, but this side you may have to write it as deficit. Usually it should be mentioned as deficit, or you can also say excess of expenditure over income. Deficit marks the loss and surplus is the profit, but we don't use the words profit or loss because it is NPO. We avoid using the words profit or loss. Finally, we move on to the balance sheet preparation. When it happens over here to the balance sheet, see, we follow the similar kind of rules as we observe in the case of profit organizations. But here you could see that we use the term capital fund, not as capital or share capital, it is capital fund. This is opening capital fund, which is mentioned to you in the balance sheet, the same money we are taking. And here certain things are to be added. That is, what is a capital receipt needs to be added, because they increase the capital, we will add the capital receipts. So entrance fees, half of it we are adding, donations full 100%, and this is surplus. Surplus is nothing but profit, I told you, but not to be called as profit because it's an NPO. Surplus. And in case deficit, students, what do you do? If there is a deficit, it should be subtracted. It should be subtracted. Now, as you adjust with the capital fund, this will be your adjusted capital fund. And then you have another item, bank loan. But remember, on the payment side of the receipts and payments account, a portion of the loan has been repaid. So it is a better understanding that when the loan is repaid, it reduces the loan. So you have to subtract. And advance subscriptions. I showed you in my question over here that this advance subscription, you could see, no, here 2018 and 19, because you have received it in advance, that it becomes a liability. Why a liability? I've explained you also that you may have to give benefits still in future. You have already received the money. So the same liability is put across on the balance sheet. All the assets are to be adjusted. See, while preparing the balance sheet, the closing balance sheet, keep your opening balance sheet as the starting point. Always keep your opening balance sheet as your start point. You could see this furniture is the value with no adjustments. Where did it come from? It came from your opening balance sheet. Similarly, buildings minus depreciation. Any depreciation is to be subtracted. If you find any appreciation, it needs to be added. And when it comes to the adjustments of the asset, remember, Any purchase or sale of the asset can also happen during the year. In such a case, the purchase will be added, the sale will be subtracted. So where do you find this purchase and sale of the asset? It will be found under receipts and payments account. I'll show you over here. You could see here purchase of books. So could you make out this one entry? Purchase of books. So when you see this, you may have to add. Already see, look at this. How much worth books did we have? Library books. Last year it was 30,000. And this year, how much has been purchased freshly? So you just have to add back these purchases of the books and you arrive at 40,000. And if there is any kind of sale, you have to subtract it. Depreciation has to be subtracted. Sale on the asset has to be subtracted. Purchase has to be added. And this one particular cash in hand, you must always remember that it is the closing balance that you need to take of the receipts and payments account. Observe it carefully. 26,800. This is your opening balance. Students, this receipts and payments account, real account, it has the nature. So debit balance, it is always like opening balance is shown on the debit side. Observe this, opening balance is 15,000. And closing balance, closing balance is given at 26,800. See, you look at the old balance sheet, you could see that cash in hand is given at 15,000. What is this 15,000? It is the opening balance which is given over. See, this 15,000, what you find in the receipts and payments account and what you observe over here is one and the same. And now when you're preparing the closing balance sheet, you see that this 26,800, which marks the closing balance, should form a part of your closing balance sheet. So this 26,800 is from the receipts and payments account, which is the closing balance of receipts and payments account. Outstanding subscriptions, you found this in adjustments. What is outstanding subscriptions? Income yet to be received. So any benefit yet to be received is an asset. So you could manage doing this particular sum. You can go for a screenshot on this one question. If I could take out all these writings of mine and you can work on it and look at the video lecture once again so that you are able to make out as to how the preparation of both income and expenditure account as well as balance sheet would go ahead. And practice more number of sums with the question banks given in PU board website, and you will be able to get the sum easily on your particular examination. And it is less time consuming once the concepts are clear. Definitely, I say you, this is worth doing. And the mark allocation would go as per like income and expenditure account and balance sheet. It would be 7 plus 5 normally, and it depends on the paper setter also to go with 1 or 2 marks here and there, but usually it is 7 plus 5. So I hope it is clear to all the students. So thank you for giving time to listen to this lecture, and I will come with more number of lectures like this for the examination purpose. Thank you.